Well, 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 look how the tables have turned. The same people who were forecasting a 10% increase in real estate prices are now calling for a significant decrease. I think it's pretty amazing how some people's voices can spin the market in either direction. So is the bubble finally about to burst? Well, I got a few solid points that might make you think otherwise. Stick around because this market update video is going to be really interesting. Hey, I'm Ollie Neitzel, and welcome to R.E.S Vancouver Real Estate Market Updates, the only channel that gives you a raw, honest opinion of what's actually happening in today's real estate market. For more content like this, be sure to subscribe to my channel and leave a comment below because I want to hear your thoughts in this ever-evolving real estate market. Now let's get right into the good stuff. What's affecting prices and why is the market shifting? The answer is simple: interest rates. Now, if you've been following my videos, you'll know that historically the benchmark price follows the rise and fall of the interest rates. Did you hear that? The benchmark price follows the rise and fall of the interest rates. Get the point? The Bank of Canada has raised interest rates 3 times since March, for a total of 1.5%. And guess what? They're going to continue to go up until they get to where they wanted them to be pre-COVID. But there's no need to panic because they're still ridiculously low. So why is everybody surprised? According to some recent Instagram polls, I've been getting a lot of mixed reactions, and rightfully so. It's almost impossible to predict what's happening in the real estate market. Unless you're heavily involved on a day-to-day basis in your current real estate market, that's the only way you're gonna get a glimpse of what may be happening in the future. And I'm sorry, but your cousin who lives in Winnipeg knows nothing about my real estate market. And to be frank, I know nothing about the market out there. Is the bubble about to burst? And I know there's a small group of you out there licking your chops, waiting for it to happen. And it might, but here's a few valid points worth considering. First off, the year is 2022, not 1981. The prime interest rate right now is 3.7%. It's not 1981, it's not 20%, so we shouldn't even be having that conversation. There's over 400,000 people projected to immigrate to Canada this year. Where do you think they're gonna live? Winnipeg? Maybe, but I can think of a few other places, and Vancouver is right at the top. There was a ton of buyers out there last month. Sure, open houses are slower, but I promise you, when buyers aren't out there, the buyer pool, or what I like to call X factor, will continue to grow and grow and grow. Inflation or not, there's a ton of people in Metro Vancouver with piles of money. Yeah, that's right, I said piles of money. They don't care about a slight increase in interest rates. A savvy investor will see the opportunity, and when they see the opportunity, they won't hesitate to capitalize. Now, I'm not saying that Metro Vancouver is recession-proof, but we do live in one of the strongest real estate markets in the world. And if any place can get through it, it's here. Different micro markets are doing different things. And if anything, I've seen a little bit of a jump over the last week or so. A higher interest rate will equal a lower purchase price, for sure. But in the end, you'll be paying the same amount for the property. So it's all relative. And in the end, people still need to move. Families grow, people downsize, and people need to relocate. The old saying with inflation goes, the rich get richer and the poor get poorer. Well, if that's the case, then don't fall into that trap. Be sure to talk to a qualified real estate professional or mortgage broker. It's time to separate the sheep from the wolves, because now, more than ever, who you work with could be detrimental to your future. Thanks for watching, everybody, and we'll see you next time.